Hi, and welcome to Crypto for Advisors, a podcast by Synergist. More than a third of Australians are into crypto, yet nearly 90% of advisors will not discuss it with them. I believe this is exposing investors to unnecessary risks, compromising the value of advised relationships, and limiting investment performance. My goal is to educate advisors and investors to bridge this crypto service gap while strengthening advised relationships. So let's get into today's episode. Welcome to Crypto for Advisors, a podcast by Synergist. Today I have Rafael Franco. Raf is a founding director at crypto specialist accounting firm Tax On Chain. He is an experienced chartered accountant who has been investing in crypto for more than 8 years. Tax On Chain is enjoying rapid growth as more and more Australians embrace crypto and need to ensure that their financial planning and reporting is optimized. So welcome, Raf. Thanks for joining me on Crypto for Advisors.
Thanks for having me, Andrew. Keen to have a chat and share some insights.
You're actually the first accountant that I've interviewed on this podcast as well. And given that accountants are a key part of our audience, I'm really excited to be having this chat with you and hope to learn a lot.
Yeah, no, keen. There's not many of us in the crypto space. There's, I don't know, maybe 5 to 10 crypto accountants who specialize in this industry.
So today we're going to be covering off 3 topics. The first is having a bit of a chat about client trends regarding crypto. And then the second topic is going to be about using crypto in corporate treasuries. And then finally, a bit of a chat around advised relationships and crypto.
Sounds good.
So let's get into the first one, which is around client trends regarding crypto. You mentioned earlier that there's handful of accounting practices which are specializing in crypto in Australia at the moment, but really the numbers are pretty small, aren't they, compared to the total accountant pool out there?
No, we're definitely in demand. There definitely needs to be more crypto accountants servicing what is quite a large market. I think you've got the stats with you. Something like 25% of Australians own crypto or have owned crypto. So that's millions of Australians who are in this market. There's not that many accountants out there who fully understand what people are doing in this space.
Yeah.
So it's going to be an area that continues to grow. It's here to stay. And professionals need to start at least feeling comfortable talking about crypto with their clients, because it's just something that's inevitable at this stage.
Yeah, it's certainly the 2 key stats that I tend to talk about is 34% of Australians either own crypto or plan on buying crypto in the next 12 months. So that's more than a third of Australia, and that's total Australian population, not just adults. So that really is showing that it's critical mass. It's now mainstream asset class. And it's pretty easy to understand why, when 9 out of the last 12 years, Bitcoin's been the best performing asset. And the other key stat that I use is that a recent survey came out with 89% of financial advisors don't talk to their clients about crypto, won't talk to their clients about crypto. And that sort of shows that there is this crypto service gap that's really formed in Australia. That is why what Synergist is focused on, helping the industry bridge. And this podcast is obviously one of the key parts of doing that. You've mentioned that you've been growing a lot because the demand has been growing. Have you seen any other changes in the makeup, the composition of your client base while you've been operating?
We've been operating for 4 years, so not for too long, but within those 4 years, we've definitely seen our client change a little bit. So probably back in 2021, we definitely saw quite a young demographic investing in crypto, which is sort of what you'd expect. Back then there was a lot of hype around NFTs, which brought a lot of that young demographic into crypto. But in the last 6, 12 months, 18 months, we've definitely seen a more mature client base, interested in crypto. And these are clients who sort of range between the ages of, your mid-30s up to your, late 60s, basically. So crypto has definitely brought in investors from all ages, all different types of wealth as well. We see the younger demographic, they're looking at investing in crypto to hopefully achieve that dream of owning your first home. Younger adults was really struggling to get into the property market just with their own wage and salary. They're now looking at places where they could invest in an asset class that is quite volatile, but you can see higher returns compared to traditional investments. So we're seeing younger Australians taking a punt in crypto, if you like, or invest in crypto to get ahead. Adults who are in their 30s, 40s, they might have a young family looking at, they might have, some spare cash on the side. They don't know what to do with it. And they're looking at crypto as a potential investment. We've definitely seen a more mature investor. And with that, we've definitely seen interest in SMSFs. I think, there's just been a massive boom with SMSFs all round. And at the moment, unfortunately, to get access to crypto or to get exposure to crypto using your super, the only way to do that is through an SMSF. That provides investors with a lot more flexibility around what they can invest. And so that gives them the chance to get exposure to cryptos.
Are you seeing a different composition in what they're holding as well, depending upon what structure that they might be deploying? An SMSF, it's a long term. Are they typically trying to keep it in Bitcoin, keeping the meme stocks out, the meme coins?
Investing through your own name is a different ball game. You can sort of do whatever you want, and hopefully you make money out of it. But definitely, when we see people looking at investing through their super, they know it's something serious. This is a fund that's meant to, provide financial benefits for when they retire. We find that most SMSFs will tend to invest in Bitcoin, Ethereum, and then, maybe some other coins out there like Solana, but it is kept predominantly in Bitcoin and Ethereum. We have plenty of super funds who are just Bitcoin only. So just keeping it really, really simple, not so much trading. It's more of a long-term strategy, like you said, Andrew. So these are people who might be in their 40s generally, and they're looking to just hold an asset till they retire. It's definitely a different type of investing strategy compared to when people do invest in their individual names.
Do you think that the people are mainly putting Bitcoin in the SMSF as a like a speculative play, trying to outperform other asset classes, or do you think that there are certain investors who are seeing it as a hedge against inflation, or potentially even as a diversification tool to spread their risk a bit more broadly, or is it generally they're just looking at, well, it's been the top performing asset class 9 out of the last 12 years. I just want exposure to their outperformance and looking for that volatility?
It's definitely to do with outperformance, outperforming their APRA-regulated fund. We're seeing the people who are setting up these SMSF, they've probably been in crypto for a few years. They're comfortable with investing in crypto. They understand the type of asset class they're investing, with the volatility, and they're comfortable with holding that asset class. So they've done it in their personal name. They've seen that they can make quite a lot of money from it if they time it right and invest in the right coins. Course, but so they're a lot more comfortable with opening up that SMSF, either go all in and they've fully believe that it'll be an outperforming asset for the decades to come, and then there's some who still want that diversification in stocks and that traditional investment, but they just want some exposure to the crypto market as well.
And do you have any tips and tricks or traps even for people who are choosing to invest in crypto through the super? I know that, for example, a lot of people keep a small amount of money in their traditional industry fund in order to and maintain some insurance through the traditional super fund, building out an SMSF. But are there any other things that potential investors should be cautious about in particular when they're going into an SMSF with crypto?
Yeah, I mean, for sure. SMSFs are a big responsibility. I think some people may forget that. When you're investing or when you're holding super through your industry or retail super fund, you don't really need to think about anything. You get paid fortnightly, portion of that pay gets sent to your super fund and you don't have to think about it at all. Now with an SMSF, now you've got the responsibility to make investment choices, and that's a big responsibility because you want to make sure you make good choices, because if you make the wrong choice or make a few bad choices, your super fund, those funds can just disappear. And crypto can happen very, very quickly. And if you're not in tune with what's going on, it could result in a loss of funds because you're not reacting to this volatile market. Every SMSF needs to prepare its financial statements and a tax return each financial year. That itself is, a bit of admin for the SMSF trustee. A lot of that is done by the accountant, which is what we do, but it's still just an extra tax return to think about every financial year. So, and it's really, really important to make sure that those tax returns are lodged on time, that you're able to supply the correct information to your accountant. So with an SMSF, the rules are very, very strict. You need to prepare financial statements that get audited as well. In terms of tips and tricks, I guess keeping things pretty simple within your SMSF is probably the best trick. Yeah, we've seen some people treat their SMSFs a bit like their personal trading account. They accumulate a lot of transactions on a lot of different blockchains, a lot of different exchanges. That complicates the end of financial year job for us.
Yeah, obviously, commingling funds is something that can be, in fact, criminal charges that can result. You've got to be particularly careful to not be just moving money between your SMSF and your personal accounts without it going through the proper change in beneficial ownership. So if you're a typical investor and you're not, looking at the market every day, you're not working in the industry, you want some exposure, but you don't want to have to be living and breathing it every day. Are there ways where you can still feel secure and safe, but not have to be like literally watching the market every day?
Like I said, keeping things simple allows you to do that. If you've got a portfolio in your SMSF that's got 20 different tokens, that means you've got to be on, you've got to be monitoring 20 different projects and seeing what they're doing. Whereas if you're just in 1, 2, 3 sort of tokens, then being the big ones, Bitcoin, ETH, and Solana, for example, there's less things you need to stay on top of. Buying Bitcoin for a lot of people is just like buying digital gold. The Bitcoin bull case isn't really going to change day to day. So there's not too much you have to stay on top of with that. But if you're investing in some altcoin in a DeFi project, for example, there will be weekly updates. There could be big events that may affect your investment in that token that you need to stay on top of. Even if it's like token contract change, for example, that requires you to burn a token to receive this new token. Like these things like that, they can often complicate things with an SMSF. So keeping things simple to a smaller portfolio definitely allows you to sort of sleep at night.
So I think there's some really good tips in there. So keep it simple, make sure whatever you're investing in is appropriate from a risk appetite point of view. And I think probably one of the other things that I talk to clients about is that if you do want peace of mind and you don't have the ability to be watching the market regularly, or you don't want that pressure of having that sole accountability, to use a broker. You can use a broker who can actually then be the one that is monitoring your portfolio. And if something is adjusting, something that is happening in the market that you should be aware of, they can then reach out to you proactively and speak to you. So that's always something, another way to help get a bit of peace of mind and sleep at night.
Yeah, for sure. And also custody is a big issue for any crypto investor, but particularly if you're holding crypto in SMSF. So knowing where your assets are at the end of the day and making sure that wherever they are, it's safe. So whether it's, you have a portion in an exchange, knowing that, if it is on an exchange, ensuring that your account has two-factor authentication. If you are going to store your assets in a cold wallet, like a ledger, ensuring that your seed phrase is kept securely. Because we've heard countless stories where people have lost their private keys. Once you lose your private keys, you can't access those assets anymore. So it's really, really important.
A lot of people have heard of FTX. Obviously it was the world's largest exchange and went bust. And took out a lot of client holdings as a result of that. What a lot of people don't understand is that that's not the first time that's happened. Mt. Gox happened in 2014. That was at the time Mt. Gox was it was an exchange, Japanese-based exchange, and 70% of all crypto transactions were going through Mt. Gox at that time, and they went bust overnight. They got hacked and a lot of people lost a lot of money in that particular hack. So that's twice in the last 12 years that the number one exchange has gone down.
Yeah.
So it's the reality of crypto. Regulation is improving, and it will put a greater scrutiny and security over time in some of these places. But you do have to be super careful. But the alternative is self-custody. And for me personally, I worry about that just as much. Like, I don't trust myself that you know, I'm going to lose my seed phrases or my ledger. And I know people who have literally got a ledger sitting on their desk with millions of dollars of Bitcoin that they can never access because they've lost their seed phrases.
Yeah.
And it's, you know, it's the world's most expensive paperweight. So it's a
Yeah.
pretty scary proposition. And again, you know, one of the solutions to that is to partner with somebody who will, you know, good custody solution like Fireblocks, where you're insured for certain frauds and activities, but you know, you don't have to worry about your house burning down and losing everything, for example.
It's just one of those things in crypto at the moment that even with the most recent act with Bybit, that was $1.4 billion worth of Ethereum.
Biggest ever hack.
Yeah. Like Bybit, they aren't Muppets. They know what they're doing.
They do, yeah.
They still got hacked. So it's a massive risk area in crypto. And another solution which we haven't touched on are the ETFs. Yes, you have to pay that management fee every year, but at least you know that your assets are safe in that ETF. So,
well, even with ETFs, you've got to be a bit cautious because not all ETFs are created equal. There's feeder ETFs, for example, which sit on the ASX, and you can be buying a feeder ETF, which means that what you're buying is not units in units of Bitcoin. They're actually units in a fund that's based out of, you know, the British Virgin Islands or Bahamas or another different jurisdiction, and you're buying units in that company, and that company is the one that holds the Bitcoin. Yeah. So if something happens, how successful are you going to be if you try to pursue them through some court in the Bahamas or UAE or something? It's so you do have to be careful even with ETFs, right?
Yeah. Well, yeah, that's a good point.
Crypto investments have really been evolving. You know, it sort of started from a bottom up retail investor adopting it, and that's then led into institutions starting to adopt it and do a complete about face and start bringing in ETFs and even BlackRock changed their policy late last year and started advising clients that they should be holding between 1% and 2% of a balanced portfolio in Bitcoin. And so the insto market's really opened up now and embraced Bitcoin and other leading cryptos. Obviously, all the news around the sovereign wealth funds, the US coming in and starting to set up a sovereign fund, a Bitcoin strategic Bitcoin reserve, and a whole range of other countries talking about it or starting to accumulate Bitcoin as well. So you've got a new market there with sovereign states. But then there's another new market emerging for Bitcoin in particular, and that's corporate treasuries. So Michael Saylor, a lot of people would have heard of, the original Bitcoin maxi, and he set up what was MicroStrategy. They were an IT consultancy basically, and then they started holding Bitcoin on their balance sheet and started making so much money on holding Bitcoin that they realized that was what they wanted to do. It was much more profitable than the IT strategy that they were doing. So they pivoted their business model to accumulate as much Bitcoin as possible. That's led to a range of copycats around the world. So MetaPlanet is on the Japanese exchange, and they copied the MicroStrategy playbook, and they were actually the highest performing equity on any exchange anywhere in the world last year. Yeah. So they grew 4,300%. MetaPlanet, so off the back of this Bitcoin strategic play. But you've also then got a whole range of other corporates which are now starting to say, hang on, why are we holding cash and bonds on our corporate treasuries? Why don't we hold Bitcoin? How has that evolved? And do you think that that is a strategy that is applicable to small businesses, medium-sized businesses in Australia?
We've come a long way from is crypto going to get banned by the government to governments buying our Bitcoin. So the landscape has changed dramatically there. And it's given companies, just like you said, and institutions confidence to adopt, a Bitcoin strategy. There's definitely, small business owners who have a lot of cash. They don't know what to do with that cash. And they know that if they're holding cash every year, they're going to lose their purchasing power due to inflation. And one solution there is Bitcoin that's been adopted by the government, adopted by Trump, adopted by countries like El Salvador. And so it is an asset that has limited supply, and as that demand grows, you'd expect price to go up. And so compared to other assets, Bitcoin is looking quite a attractive asset for small business owners to sort of diversify some of their cash into. They can't ignore it anymore. It's everywhere. It's on the papers. There's always a headline in crypto, whether it's for the right or wrong reasons. Main theme has been countries adopting Bitcoin, big institutions adopting Bitcoin, investors with a lot of cash on the sidelines are obviously quite interested to diversify into Bitcoin. People looking at Bitcoin as a hedge against inflation, and we're seeing it. It's just becoming more and more popular. Investors are more comfortable with holding Bitcoin as this asset class is here to stay, and so that's changed the landscape massively.
Yeah, one of the first executive orders that Trump signed was the repealing of the SAB 121, Special Accounting Bulletin 121 in the States, which, in summary of that, my understanding anyway, was that it allowed banks to view cryptocurrencies as an asset rather than a liability. And so you might have $100,000 worth of Bitcoin. They had to treat it as a liability on the balance sheet. And now, it's crazy, right? But now they've repealed that and they've said, no, you treat it as an asset. What about in Australia? If one of your business clients, for example, had $500,000 worth of Bitcoin sitting on their corporate balance sheet, is that as a current asset? Is that subject to depreciation? Is it like what's the accounting treatment and the benefit that they can derive from that?
Yeah, I mean, in Australia, it's relatively simple to just acquire Bitcoin for your company or for your business. You obviously need to KYC your company with a particular platform that you're looking to buy that Bitcoin through. From an accounting standpoint, if it is that long-term investment, then it will sit on the balance sheet as a non-current asset that can get revalued every year, depending on how you want to present those financials at cost or at market value. And you may have to choose depending on the purpose of these financial statements. But yeah, it's relatively easy to sort of hold Bitcoin on the balance sheet. It is recognized as an asset. And one of the things that crypto does unlock is decentralized finance. It is possible to use your Bitcoin or use your Ethereum as collateral on a DeFi protocol, and you can borrow stable coins, which are US-backed, dollar-backed coins. You can borrow these stable coins against your Bitcoin or your Ethereum. So without the need to use a bank or a third party, you can do this on a Sunday night with a few clicks. What that shows is that blockchain technology, decentralized finance does unlock a lot of possibilities. And if you're a business and you want to borrow money against your collateral, well, you can do that if you're holding Bitcoin. By holding this asset on a blockchain, it does open up other possibilities as well, such as, borrowing against your Bitcoin, or even just lending that Bitcoin out. For example, you can earn an interest on Bitcoin if you lend it through a DeFi application. There are a range of things that you can do, but what we're seeing at the moment is just businesses feeling comfortable holding this asset on the balance sheet, which is a massive step forward.
It can be a hedge against inflation. It can diversify your asset base. It can earn interest. It can produce a new revenue stream as an appreciating asset. The other benefit that we haven't touched on yet is the utility of it as a medium value transfer. So it's a currency after all, or you can switch your Bitcoin to a stable coin in a click and then transfer that to the other side of the world instantly for very little cost, and even with very large sums of money. So comparing that to a normal international banking transfer, which can be quite arduous, that's got a lot of utility in it just of itself as well.
Yeah, even just businesses accepting crypto. I touched on Jane, we accept in crypto. And where that comes really in handy is when we've got a client from the US. If they're going to make a bank transfer, it's super complicated. It takes a few days to do. We've got to give them a bunch of details. Whereas if we just send them our Ethereum address or Bitcoin address, they can send those funds within a minute. And when we've got it in our address, and we can cash that out if we like, if we want to. It just simplifies things massively. And we've got contractors who do live in other parts of the world who may not have access to a bank account as easily as Australians do. Sending stable coins to them is a massive game changer for them.
All right, so let's move on to the third topic here, Raf, and that's around advised relationships in crypto. I mentioned earlier that 89% of financial advisors won't talk to their clients about crypto, and that's typically because of two key reasons. One is a concern about the regulation, or specifically PI insurance and what coverage they might have. But there's also a lack of education is the other key element to this, and just not really being across crypto enough to confidently discuss it with their clients. If you had to give some advice to accountants or financial planners who were about to have a tax planning conversation with their clients around this time of the year, and their clients start asking them about crypto, what can they say without putting themselves at risk?
From my understanding, their licenses or their insurances, or both, they won't let them advise clients on crypto. So there's sort of that barrier there, which is unfortunate. And then the second part to that is a lot of traditional financial advisors for a long time have neglected crypto. I think you're seeing more financial advisors feeling comfortable with talking about crypto with their client. I think it's really, really important if you're an accountant or advisor or just a professional and your clients do have crypto to understand at least what they're doing with their crypto, just having some sort of familiarity over this asset class. Because at the moment, what we're seeing is where there've been people who are interested in buying crypto. They go to their advisor, their accountant or their financial advisor, and they'll want to speak about this asset class with them. The financial advisor, the professional, doesn't want a bar of it, doesn't want to talk about it, which is fine. But what that sometimes does lead into is the client doing their own research and unfortunately falling for a scam that's on internet. And we're seeing people lose tens of thousands of dollars because they think they're getting access to the crypto market. They think they're doing it the right way. But when you don't know something or you're new to a market, you don't know who to talk to and you're just Googling, there's going to be a bunch of scams out there that are targeting you specifically because you don't have the knowledge, nor do you have the support from a professional telling you, if you want to access crypto, here's how you do it safely.
Right.
At the very least, understanding that, if you don't know too much about crypto, that's fine, but at least, maybe providing some guidance to your client, partnering up with a, trusted education source that you can lead your client. If they are interested in crypto, then at least you provided a pathway to access crypto or know a bit more about crypto in a safe way from, trusted sources.
So Synergis, we run education workshops to help retail investors and advisors work out whether crypto investing is right for them. And then if it is, what's the best pathway to go down? And I guess that's one thing I'd, obviously recommend my own services there, but having somebody who is independent, Synergis doesn't sell its own products and services. That's a good way to trust that the education is balanced and doesn't have a predetermined outcome that they're angling towards. So that's obviously something to look for. But one of the things to really look for that I recommend is look for an Australian company. At least if it's registered in Australia, you've got the consumer protections of the Corporation Act, the Consumer Code. As soon as you go with a company that's domiciled in some tax haven or other jurisdiction, your risks really multiply as far as it's like the likelihood it could be a scam, or even your ability to be able to try and recover anything if something goes wrong.
Yeah, no, that's right. Sticking to an Australian exchange platform broker, it is definitely something that if you're a new investor in the space, at least stick to an Australian business or service. As an accountant or as a financial advisor, you have a duty to the client and to ensure that client, has as much support and guidance that, if they want to get into something that you're not too sure about, at least give them some, sort of sources to be able to find that support that they are looking for. So instead of just telling the client, not interested in it, that's not good for the client, nor is it good for your business, because obviously if you're an accountant or a financial advisor, you want your clients to be retaining their wealth and growing their wealth, not potentially losing it to a scam.
Well, as a shameless plug, that's exactly the client that I'd recommend referring through to Synergist. If you've got a client that's interested in crypto, they're not sure, send them to Synergist. We'll help educate them so that they can make up their own mind whether crypto investing is right for them. And if so, work out the best pathway for them. And then we only refer clients onto trusted partners that we've got long established relationships with.
Yeah, absolutely.
Cool. All right. Fantastic, Raf. So we've covered through those three topics. We've gone a bit over time, but that's been really interesting. Thank you. It's very relevant conversation at this time of the year as you start having conversations, tax planning conversations with your clients. Good luck for your future growth. I know there's an exciting future for Tax on Chain. How can anyone find you if they are looking for a crypto-focused accountant? How can they find you, Raf?
The best way is through our website, taxonchain.io. We list all our services on our website if you want to know more about what we do or how we can potentially help. But at the end of the day, we are an accounting firm that specializes in the space. Any sort of accounting service that you would expect from a traditional accountant, but just focus on the crypto industry. We do offer a free consult for anyone inquiring about our services.
Fantastic. All right, Raf. Well, thank you very much for your time, and I'm sure we'll be in touch.
Yeah, thanks for having me, Andrew. Cheers.
This podcast is for informational purposes only and does not constitute financial advice. All views of Andrew McPhee and his guests are their opinions only and do not reflect the opinions of Synergist. You should not treat any opinions expressed as a specific inducement to make a particular investment or follow a particular strategy.